yesterday, what we saw yesterday was just the first step. All right. And that was using what? What tool did we add yesterday?
The averaging tool.
50 MA.
Yes.
All right. We use the 50 EMA. Okay. We use the 50 EMA. And
SMA.
sorry, we use the 50 SMA, the simple moving average. All right, not the exponential moving average, but the simple moving average. Okay. All right. And what are the key rules with the 50? Who can tell me?
Chris said it's kind of like a magnet. Price always comes back to it.
Okay. But what are we looking for the 50 to tell us? Like what is the 50 telling us?
Oh, when our waves can start counting.
It gives us the direction of the trend.
All right, it gives us the direction of the trend. So the moving average, the 50 period moving average, we're using that to show the intermediate trend, right? We have the short-term trend, which is the 15 moving average. Okay. We have the 50, which is the intermediate trend. Boom. Okay. 15 here. And then we have the long-term trend, which is going to be the 200. All we're going to focus on with this wave counting strategy is we're going to focus on the 50. We're going to use the 50 as our guide, So it's very important that we want to trade in the direction of the what?
Of the trend.
Of the trend. Yes. All right. When I first started trading, we had a simple philosophy is that the trend is your friend. All right. The trend is your friend. All right. So you don't want to go counter trend. You want to trade with the trend. All right. And it's very important that you also begin to recognize the angle of the 50. All right. The angle or the slope of the 50 is used to determine the direction of the market. Okay. So when the 50 goes flat, like let's just say in this area here, all right, we're not looking to take a trade. We're not looking to start our wave count. We want to see a hook of the 50. We want to see that 50 begin to angle up or to angle down. All right. Does that make sense?
Yes.
Okay.
Yes.
So this has been a journey that we have all started together. Zones and key lines, market structure, rejection trade, break and retest. We talked about the imbalance. Didn't go into detail, but we talked about the imbalance, and we'll do that a little bit later. All right. But the next piece of the puzzle is going to be how to count waves. All right. Because if you know where you are in the wave count, you can make an accurate prediction on what the market is likely to do next. All right. Now, I said a prediction. We don't know for sure, but we can definitely make an accurate or a high probable prediction on what the market should do next. Okay. We just want to take calculated risk. All right. So with that being said, we are going to add another indicator to your chart. All right. We're going to add another indicator to your chart. Now, Chris, let me ask you, would you prefer them to have two separate stochastics or
No.
just have the K and D all on one?
All on one.
All right. No problem. Okay. So here's what we're going to do. I'm going to drop my screen. Okay. And I would like, who has been my help? Adrian, thank you. Adrian, Jeremy, or anybody that was in yesterday's class that has the 50 colored moving average on their screen. All right, cool. All right, so here's what we're going to do. Okay, here's what we're going to do. Now, Adrian has 3 different moving averages on his screen, right? The magenta represents the 15. You can see the colored SMA. All right, that changes color, right? It changes color along with the angle of the 50. Okay, so uptrend, market goes flat, begin to hook down. Now we have a downtrend. All right, and then lastly, he has the 200 on his screen as well. All right, but our primary focus for today is going to be utilizing the 50 moving average, the 50 simple moving average, in conjunction with our stochastics. All right, in conjunction with our stochastics. So I strongly recommend that as we are teaching, you guys are adding these indicators to your chart and setting up the parameters for your indicators. All right, now this is being recorded. All right, so you can go back and rewatch the video when we are finished or at a later date, just for insurance. But I strongly recommend that you guys just begin to do this with us. All right, so with that being said, at the bottom of the screen, we see the stochastic. Now, the stochastic is an oscillator. Okay, the stochastic is an oscillator. All right, and what this indicator is used for, it is used to measure the cycles of the market. Okay, the swings, the breaths, the ups, the downs of the market within the direction of the main trend. Okay, so the stochastic is going to help us with our timing, as well as it's going to show us our swing highs and our swing lows. It's going to show us the cycle, but most importantly, it is going to help us count the waves. Okay, it is going to help us count the waves. So the moving average shows the trend. The oscillator, the stochastic oscillator, all right, it is going to give us the cycle in which, and we need the cycle in order to count the waves properly. All right, so with that being said, Adrian, I need you to double click on your stochastic. Go to properties for me. All right, because we need to go back and add in the D. All right, so the stochastic, go back to parameters. All right, the stochastic is made up of 2 moving averages. You have the K and you have the D. All right, so the very first thing I want you all to do, I want you to notice the parameters. All right, where it says the K period should be on 5. All right, your D should be on 3, and slowing should be on 2. Okay. Now, when we got started, I just wanted you guys to use the K, all right, for the timing of when to look for the trade. All right. Remember, if we were around our demand zone, we were looking for the K to come down to our swing low, and where we were looking to see the hook in the other direction. All right, just measuring the cycle. But now we're going to use the D, which is not present on his screen right now. We're going to use that to help us count the waves. So Adrian, what I need you to do I need you to go down to that signal where it says none and give that a color. All right. Click OK. All right. So now you can see that there are two moving averages on his stochastic. All right. If you ever get confused, which one's the K and which one's the D? Which one's the K and which one's the D?
So let's do this, Jason.
Yes.
Could you, I'm sorry, what's your name? The one who's spring?
This is Adrian.
Adrian, would you make your K transparent for now? Just show D for now. So
Just
main,
show
make
D.
that none for now.
None. Okay.
Yeah. We just want to
All
show the D. Okay, good.
So now this is the D. Okay. So notice the D. The D is going to be slower than the K. So your peaks and your valleys are going to be rounded. It's going to have a more rounded curve or rounded edges than your K.
We also need to add a 45, 55 level.
That is correct. And the next thing we need to add, all right, I need you to go to your levels, Adrian, and you need to click on add, and I need you to add the 45, click, and then I need you to add the 55.
Very good.
And click OK.
Good.
All right. Now, are those lines too thick, Chris?
Yeah, okay. I mean,
Yeah, we're good. All right.
All right.
All right. All right, y'all. I'm gonna need you to guys and ladies to pay attention because it's about to we're about to take this to the next level. Okay.
Yeah.
And in order to count the waves efficiently and correctly, all right, you guys have to pay attention to these.
Make them a little thinner, Adrian. Maybe a little bit thick.
Yeah. So put them on the second one.
Yeah. Oh, okay.
All right, put them on the first one. Okay, and then take your take the D. You could bring that down a little bit too. Just bring that down one. They do look a little thick. Go to parameters. All right, and then D, and then take that down. Put that on the first one and see what that looks like.
Second one's fine, I think.
Oh, the second one was fine. Okay, all right.
I'm guessing. Yeah, all right. Okay,
Yeah,
that's cool.
Okay.
Yeah. All right.
Now, one more thing. Does that yellow work with that red? Will black show up a little bit better?
Probably so. For the
all right, change the yellow to black.
It's just that you're
My background, I need to make it lighter.
no, just looking at how the red of the D line is interacting with the line. That's what we're looking at. I mean, it's gonna either way, it's gonna be okay. We'll work it out.
Yeah, we'll work it out.
Yeah.
All right.
Okay.
All right.
Let me pick it up from here.
Yeah, let's go ahead and tag team this thing.
All right, cool.
All right.
So basically with D is only used. Well, first off, let me tell you about D. The D is slower, but more accurate than K. Okay. K, when we put that back on, is faster, but less accurate. So you can just trade with D by itself and you would be very accurate. The problem is by the time it gives you the signal, it's going to be very slow to give you that signal. But when it does give the signal, it is very accurate in terms of when it's going to give it. Okay. So we use K in conjunction with D because K gives certain patterns. It'll give you a signal, which will show you what a signal actually is prior to when D is actually going to turn. And we'll use the K to actually trade with. D is going to help us with wave counting because it's the most accurate. it is very good with showing you what wave you're on and if you're on the next cycle. Okay, so let me talk about cycles real quick, because this is the part that can get people all confused. And I'll try to do this as slowly as I can without going too fast. If I'm going too fast, please stop me, say something, and I'll go over it as many times as we need to go over it. Let me just annotate. This white will be fine. Okay. All right. So what we look for is cycle highs and cycle lows to determine wave counts. All right. In order for the market to become a cycle low, meaning that it must come down and go up, this low curve that we're seeing here, you must have D must come below 45, which is the lower line, and come back above, I'm sorry, it must come below 55, hook down and back up to 45. Once it has done that, that is a complete cycle low. So I'll repeat that again. Let me try to draw it in as I'm doing it. You must have the not the market, but the D line come below 55, below 55, and hook back to come back above 45. That is what makes a cycle low. A cycle high happens when you have the market come above 55 or above 45, I'm sorry, which is that low line, and then come back to 55. So above 45, come back to 55. Now you have a cycle high. The highest point is your cycle high. The lowest point is your cycle low. And that is the term of where price would be. So when it comes to price, the lowest point of price, when the market has, I'm sorry, I keep saying the market, when the indicator or when percent D has made a cycle low, the lowest point, once it has made a cycle low, is your wave at this point. In this case, it would be right here. Your cycle high in that case, the highest point, once it has come above 45 and hooks back and goes below 55, that highest point of price at that point between those two areas is going to be your cycle high point. In this case, be up here. Well, that will be your wave high. I'm sorry, I'm saying cycle high. So you have your cycles here determining your waves. Okay. What else is there? Now, all of this that happens in between, we talked about yesterday, where the rules of when you start counting waves, first thing we must see is with the 50, what do we need to see the 50 do for us to start counting waves?
Angle.
Needs to, yeah.
As the angle in one direction or the other. And that is where our wave count begins. Okay. So if we're looking at this, let me erase these lines real quick. So we're looking at this and we're seeing here is where the 50 began to start angling up. And I'm just simply going by the color at this point. It changed colors at this point. Tells me, okay, it's starting to angle up at this point. And I'm looking at price start to go up at this point. When I look down at my stochastics and I'm looking at percent D at this point only, K does not determine this, is why I don't have it on. D, in order for me to find, the first thing I'm looking for is where's my wave one? In order for me to find my wave one, I've got to have a cycle high on percent D. So based on the rule we just said, if we have And this is after the hook first now, because we wouldn't go back here because the 50 has not turned up yet. So all this behind this point on percent D doesn't matter to me at this point. I'm only concerned about what's happening after the 50 has turned up. Okay, so I'm looking at the percent D going up here. Now it is hooking back down below 55. The highest point when that happens, or when that occurs, and the highest point on price between these two areas is right here. So that tells me that this is my wave one right here on this candle. Okay, now I'm looking for, where is wave two? I have let me erase this. My one up here. Okay. Now I'm looking for the cycle low to determine the wave two, which is that's going to be my low coming back, the retrace coming back towards the 50. And I'm looking here for the next cycle low. I can see that here. The lowest point on price in the middle of this cycle low is right here. So this is going to be my wave two. Okay. Now, where is my wave three? Oh, let me first say this. Remember we said we could have complex retraces before you have a true cycle. Well, in order for you to have a complex retrace, you still have to have a cycle to determine that complex retrace, or where that actual complex retrace is. Otherwise, you have nothing. All you have is the market wobbling back and forth, but not giving you a true cycle. So that is no count. There is no retrace. It's nothing unless you have a cycle telling you it is first. Okay. So here we have the market come here in this area. We see price doing what it's doing here, but we don't have, what we're looking for is a cycle high at this point. We do not have a cycle high between this area to give us a count. So there is no this is not a complex retrace that's happening in here. This is just the market going back and forth. Okay. So
You're talking about in this area.
yes, I'm sorry.
Gotcha.
I'm doing this as though this is my screen and I'm forgetting that I'm drawing on somebody else's.
Gotcha. No, it's all
Okay,
good.
there in that area, comparing it to this area, we do
Correct,
not have
gotcha.
a cycle high to tell
Okay.
us that we have a new wave count of any kind, be it complex or anything. There is no wave count in that area. Okay, we don't have that until this cycle completes. Highest point between these two areas is up here. So I know that this up here is going to be my wave three. Actually, on that green candle, so I'm got it over there because my screen is being blocked by this panel. Let me move it out of the way. Actually, it's up here, the red candle. Let me do this. That's going to be my wave three. Okay. Now we are looking for a cycle low to determine where is wave four. So here market comes down, not the market, percent D, he keeps saying that. Percent D comes down, comes above 45. So we do have a cycle low right here. This is going to be 4. Okay. Comes up, does not, it gives us a cycle low here, but actually what it's doing is giving us a what they call a it's a second chance pattern. And the reason it's a second chance pattern is because you don't have a cycle high between these two areas. So what's happening here is that this whole thing is your cycle low because you did not make a cycle high between it. This did not come above 55 and come back down like such. It stayed there below 55. So you don't have a cycle high. So in this case, instead of this first area here being your wave 4, this is going to be your wave 4 because this happened on the cycler. Does everybody understand what just happened?
Yeah,
Yes.
that makes sense.
Okay. So we're waiting on true cycles. If you don't get it, that's not the true wave count, but it can look like it at first until it completes itself, but it did not complete by going above 55. Okay. Okay, so that's your 4. Now you come back to, let's see, back to this. We're looking now for a cycle high because we're still green here. We're still going up, so we're still counting. We're looking to see, are we going to get a wave 5? Well, we do get a cycle high. The highest point between that cycle high would be up here, this high, but what don't we have to make this a true wave? To make it wave 5, let me say it that way. What don't we have?
The counter didn't go above.
Say it again.
The counter, you didn't have a full counter above 3.
The third wave, yeah.
Very good, very good. We don't have a full candle above wave 3. So what this truly is a failed wave 5, or you could call it, this will be 4A, this will be 4B.
Okay.
Got it.
Which is just a part of a complex retrace. But as the market comes back and tries to make the cycle low, which goes all the way over here, your 50 goes flat in the middle of all of that, which means all of this count stops. Now we're looking at a situation where it's either going to continue back to the upside, or it's going to turn around like you see it just did. And in this case, now we restart the count. So now we're looking at the count starting from this point, because that's where the 50 started to angle back down. Now we're looking for our wave 1, which would be the cycle low, lowest point on price of this next cycle low. In this case, we have a cycle low happening here. All of this is a cycle low because it never made a cycle high till it gets back up here. So that lowest point between that area is right here. That's your wave 1 down. Okay. Now we look for a cycle high. We have that here. Highest point between that cycle is right here. This is going to be your wave 2. Now, what do we have here? We had the market come down barely. I'm going to say it did. Barely making cycles, not the greatest, but they are cycles. That being a cycle low, this being your lowest point, what do we call this at this point? Is this a wave 3 or are we in a complex retrace?
Complex retrace.
Very good. Because we did not make a full candle below wave 1. This is going to be 2B.
Oh, full candle. Okay. Full
Yeah,
candle.
full
Below.
candle below
Gotcha.
this,
Okay.
this point here.
Below that wick for the
Yes.
wave 1. Gotcha.
Yes. Okay. So that's that cycle. That's your 2B. Now we're looking for the cycle high. It does give one, barely, but it is one. This is the highest point up here. This is going to be your 2C.
Right. Gotcha. Okay.
Okay. And now we're at the current market. Now we're just waiting to see if we're going to get a full candle below wave 1. If we do get that full candle, then that will be the wave 3 that we're looking for after this complex retrace. Okay, so when we look to take our trades, though, we're not trading off of D. Again, you can trade off of D, but you really want to get your eyes trained to where you can add in K on this. Okay, because when you understand how to do that, you're able to see D is going to show you whether or not you're in an area where, okay, this is where we're most likely to get this turn in the market, because this is the most accurate way of looking at it. And then D is going to give you a little bit of something else to show you what candle to actually take the trade on. So what I'd like for you to do, Adrian, is go to your indicator again, go pull it back up to your properties. And I want you to put a color on K so that K and D are showing. Okay, so now we have K on the screen. And this is where we're looking to take trades using that to time what is the proper area to take a trade off of. Okay, now let me say this also. I know that up to this point, you have been trained to look for price action patterns off of key lines. You wait to take the trade until you see the price action pattern. What I'm about to show you here is a way to get into a trade in the middle of the price action pattern actually happening. Okay, so it's actually going to cut your stop losses a little bit, well, a lot, and it's going to cut the time that you have to wait for that price action pattern to actually occur. Okay, there's a little bit more into this as well than just seeing it on one screen, but when this whole thing is done, you'll see why we do what we do, because it's going to take a 30 or 40 point stop loss and turn that into a 10-point stop loss, which is huge.
I'm glad you said that, man, because I feel like I'm always late on my trades,
Well, yeah, we're going to have
waiting for those PAPs.
That's why we brought this in and saw that it was a great tool, because, let me just go back a little bit. I've done naked trading, meaning that there was no indicators on the screen. I may have been naked trading, but no, I'm not talking about that. But just the trading on the screen, on the chart, we're talking about the indicators. I've done naked trading where there are no indicators on the screen, just solely drawing in my key lines, zones. Nothing wrong with that way of trading. Don't get that wrong that we're saying there's something wrong with that. There is nothing wrong with that. We have traders in the group that just prefer, I'm just going to stay with my key lines and zones. I don't want to use no indicator. Fine. No problem with it at all. The reason I like indicators is because I see that it gives me an edge. Because I know the price action pattern off of the key lines methodology, it allows me to fine tune that to say, okay, I know I'm hitting a key line, and I know there is if it's a 4-hour key line, there's a 30-minute price action pattern that's going to confirm in the 30-minute that is going to reject off of that 4-hour key line. Knowing that, and knowing if I'm seeing that hitting this area for the first time, and I have this tool that we're showing you, giving that at the same time I know what I know about 30-minute price action off of a 4-hour key line, then what that's going to give me is an opportunity to say, okay, when the first candle hits the key line in the 4-hour, which I'm not even looking at the 4-hour, I'm not even looking at 30-minute, but as soon as the candle hits the key line, I know that this is the first rejection that is being prepared off of that key line. So what I'm looking for is what's going to give me the highest probable look of that rejection sooner than a 30-minute price action pattern. So that by the time the 30-minute price action pattern actually happens, I may have taken 2 to 3 trades within that price action pattern, going in the direction of the rejection that I am expecting. So whether you are a short-term trader, meaning you want to, when I say short-term, you're a scalper like myself, where I want my 20 to 40 points a day and I call it a day, or whether you're somebody who says, hey, I want to get in the trade and ride it for 300 points, our goal is still the same. We want the shortest stop loss possible with the highest gains as possible. Okay, whether you're taking that gain short or whether you're taking that gain long, the goal is still the same of you wanting the lowest risk possible to take that very same trade. And that's all this is. All right.
So Chris, are you saying that this, allows you to enter trades in smaller time frames because of the confirmations that you're getting?
Absolutely.
Got you. Okay, that makes
Exactly what
perfect
I'm
sense.
saying.
Got
Absolutely.
you.
Yes.
Got you.
Now, because it is and I won't go into the time frames I'm looking at because we even go even smaller than minute frames. We're using Ninja Trader because it allows us to do tick charts. Tick charts are where it shows the actual trades
Volume.
that are hit, number of number of trades hitting the market. Say it could be a 500 tick. 500 ticks hit the market. That is a candle. Or 1,000 ticks. 1,000 ticks hit the market. That is a candle that's created in the 1,000 tick chart. So those are even more micro than minute charts, but using this same skill that you're seeing right here. Okay, can't do it on MT4 or 5, which is why we use Ninja Trader to do it, because it does it very well there. But you don't need it for what you're doing. It's okay. You don't have to have it. We're going to show you this with what you have, and it works just fine with minute charts. But what the concept does is, what we did was we brought you in to the understanding of, all right, you have to look at, from a higher time frame perspective, you have to look at trading off of a higher time frame perspective in a lower time frame. Same concept, except we break it down even further with this. So instead of you waiting or looking at a 30-minute price action pattern off of a 4-hour key line, you could be all the way down to a 5-minute pattern or a 5-minute entry off of that 4-hour key line. And you may get, instead of one entry, you may get a couple of different entries before it actually takes off. Okay, that's what's so big about this. And when you
I
understand,
feel like
how
that'll
that,
make it easier to do the 3-to-1.
oh, absolutely, it blows that out the
Because
water.
when you're dropping down to like 30 from 4-hour, it's hard to, like, I see 2-to-1s, but it's rare that I see like a 3-to-1. So that
Yeah,
makes a lot of
you
sense.
blow that out the water.
Cool.
You really do. Okay, so I just wanted to go over that as to why we even doing all this. I'm telling
Gotcha.
you, this stuff works. Yeah, it just works. All right, so back to where we were. All right, so we just entered or put K on the screen, and let's see. Where do I want to go first? All right, let me do this. So we know that this is wave 1. We know here is wave 2. Wave 3 was up here. 4 was here. And what time frame are we in?
This is a weekly.
Okay,
Yeah.
that's fine. No problem. For now, I'm not going to worry about all that. What time frames yet? All right. So knowing that we are in a early trend, a trend that is just beginning when this first starts to turn here. Okay. What we're looking for, we're not necessarily trying to catch this. At least not yet, we aren't. There are ways to catch that too. We just don't have the tool yet. Well, we have the tool. You don't have the tool yet to catch that. But I just I shouldn't say it that way. Yeah, we haven't shown you the tool.
I got you.
To catch that. So what we are going to show you, though, what we are showing you right now is how to catch this and this consistently. Wave 2 and wave 4. First and second retraces in the trend. Okay. Is what you want to be looking for. All right. So we know we got wave 1 up here, wave 2 here. We circled already. And all we're looking for at this point on wave 2, what we'd like to see is a hook. It's really what we want to see right here. And this is actually a good point because I called this what it was earlier, second chance pattern. Okay, here in K, what we're looking for is a hook in K that comes preferably down to, if it's a cycle low, we want the hook to be down to 20. Okay, the candle that creates the hook would be the trade that we want to take going back in that direction. Okay. In this case, though, what happened was that it gave a, excuse me, you had a, no, you did get that. All right, so you got the, what was 2D, that was the lowest point there before I'm just looking at where the cycle is. That's right, that was 2. And then this came back here. That's what it was. Okay, I'm just trying to see exactly where we were. All right, so you had this cycle low that gave you the hook right here. Initially, this would be your trading candle that you want to look at to take the trade off of. Being that this is the weekly, this is why this is giving this look. But I'm going to show you some others once I have you go to a lower time frame here. But what we're looking for is a hook in K off of a wave 2. Initially, this would have been my wave 2. Just basing it off of where D was. To go back up at this point. Your out on this would be below the candle that made the hook. Okay. But you're not going to be taking this in a weekly time frame. So I was asking what time frame is this because of the way this looked. Want you to go to, let's go to a 4 hour first. And I want to show you something here. All right, let's do this. Draw in for me, just draw some 4 hour zones.
Oh man.
Just the key lines.
Jason, where you at? Nah, I'm just playing.
I know you know how to draw some 4 hour zones.
Yeah, I can draw some.
Let's go back and go.
He got it. I don't know why he tripping. He got it.
Man, I be getting called out, man. I be getting nervous, man.
It's all right, bro. You're all right. We ain't
Now, this was what I was talking about with Miss Sheila earlier, man. It's the
Not gonna-
latest demand zone is in 2020.
I'm going to show you where I want you to draw one. Draw them rather. Put one here. Just draw that out.
Cool. Got it.
Let's see. Okay. Let's see. We had do that one. Something else. I'm not going to do that. Let's do this one back over here. Do I have? No, that's off of a swap. Let me see your history a little bit. Just make it smaller. There you go. Draw. Bring this right here. Bring that all the way across where I just drew. Okay. Now I want you to drop down to a 5-minute time frame. Okay. And go back a little bit. There you go. Just
Oh, you want to see all of them?
yeah.
Oh,
You
can't
can
go.
just, I mean, you can just go back on the screen, but still let your candle show.
Back this way.
Yes. Let's see. What I am looking for. That gap. Go back forward. Bring it down a little bit right here. Just on the yeah, on your right side. Trying to see how close we were up there. Okay, so there's some other zones in between here. I was trying to see where I can see that intersection to show you that rejection that I saw. Go back to your 4 hour again. What was that? Put a horizontal line. Yeah, right here. Put a horizontal line right here. I'm saying horizontal, I mean vertical. My bad.
Oh, vertical.
Vertical.
On this
And
one.
another one right here. On that green candle.
One with the long wicks or the one with the body?
the with the body, yeah, the body.
Gotcha.
That's the one that actually hit it. Okay.
Gotcha.
And let's see, come to this area here and just put one in here as well, because that's a break and retest. Well, did it break? I don't know if it retested it yet. It did break. All right, now I'll drop to the 5-minute and go back to the first vertical line.
You want me to zoom out some or?
Is that the first one? That's not the first one though. This is the, yeah.
Oh, the first one from
First
left to
one
right.
that to the left. Yeah, yeah.
I got you. My bad.
That's the
Got you.
one.
There
Yeah,
you go.
in here. Okay, now what I want you to do is bring it out so I can see the candles in this area.
Zoom in, you mean?
Yes.
Gotcha.
Okay. Excuse me. Okay, so here, if I did a wave count between here and before it turned, count those waves for me that you see.
Yeah. So beginning here.
Yes, sir. What are we looking for here? We have the 50 turning
50.
up. So what's the first thing we're looking for? We're looking for a wave 1 to the upside, right?
So it needs to be above the 45, but come down back below the 55.
Okay.
So that means
point
all
between
of
that area.
this will be 1, right?
Actually, yes, you're correct. Highest point between that area is where?
Here.
Very good. So that's your wave 1.
You want me to type it in?
I'll just write.
Oh, okay, go ahead. Okay. All right.
Wave 1 is here. Where's your wave 2?
Wave 2 is here.
Okay. Good. That's your wave 2. Wave 3.
Wave 3. I'm looking here because I see that.
Okay, so it's the highest point before the next
between.
wave.
Got you.
Right.
Got you. So here.
Be up there. Yeah. So that's your 3. But what did we hit?
We hit a key line.
Okay. How many waves on average do trends go?
3 to 5.
3 to 5. So we're at wave 3 hitting, what key line is this?
That is
what time frame?
Oh, that's 4 hour. 4 hour.
4 hour key line. Okay.
Gotcha.
So what we're looking for, what is expected to happen off of this key line? It's the first time hitting it.
Expected to reject.
Expected to reject and go where?
Is this a supply or demand? I don't know.
Supply.
Y'all help them out.
So we expecting to go back down to a demand if that's a supply.
Okay, that is exactly what we expect. All right. So we just hit this area. We're on wave 3. What do you have here at that point on the cycle indicator?
I have a cycle high.
You have a cycle high at that point. This is a trade opportunity. Put your crosshair on this so they can see where this lines up. Okay. You have a hook at the highest point that you have a cycle high on K, which is the black line that went above 80, hook down at 80. It tells you exactly the candle to take the trade off of. Okay, move your crosshair to the right a little bit. Okay, now we're in the 5-minute time frame in this particular case. So what you'd have to do, the way you trade this, is your entry would be here. Your stop loss would be here. Okay, mark this point. What is that? When I say mark that point, I mean
Measure.
what is that level? What number is that?
What level is it?
What is the price? What price is that at the low
Oh,
of
I
that
got you.
candle?
That's 1.13441.
Okay, how many pips is this? So we're in the EU. So how many pips is this stop loss?
That would be 23 pips.
23 pips. Okay. All right. Now, here we can see that the market doesn't actually get you in until over here.
Yeah.
Now, of course, you took a little heat. Didn't stop you out. We're still good. Actually never comes back to this point. I go to the right.
Yeah.
Actually, it still didn't come back up there. Would I hold a trade this long? Heck no, but still, it still works out. But keep going to the right. Do we not hit this 4-hour key line before
Can I
we
measure that?
Did it ever stop us out? Let me ask you that.
No.
Oh,
Okay, so if you were diligent enough, I won't say diligent enough. If you were that type of trader, you wanted to stay in it till it hit the next 4-hour key line. It went 4-hour to 4-hour. Okay, but now let's go back to where we got in, and we said that was 20. How many pips?
23.
23 pips. Go to your 30-minute time frame.
Chris, can we go back and review that entry one more time?
Sure. Okay. Okay. So you had a cycle high here on this candle, which is the one that happened to hit your 4-hour key line. Okay. The way you trade this is you put your entry at the low of the candle that made the hook at the cycle high point, which is at the 80 level on the cycler here. So it made a hook here at 80. The candle that created the hook was that candle right there.
Okay.
So that is your trading candle, or your entry candle, I should say. Your stop loss is above that candle. Okay.
Still 3 to 5, pips below and above for the stop loss.
I know you've been taught 3 to 5. I just put it at the high of the candle and the low of the candle. I don't worry about 3 to 5. Because if it's going up there and go past that, at 1 pip, it's going to go at
that's true.
3 pips.
That's
So
true.
1 is enough for me. For me.
I got you. I got you.
Different thoughts on that. Mine is at the high of the candle, I'm out. If it goes, so breaks that high, I'm out of that trade. Okay. Okay. So we have that. We know that this is a 22 pip
23
stop loss.
pip, yep.
22 pip stop loss. All right, let's go to your 30-minute. And let's find that same area.
Right here.
Okay. All right. So based on the rules of how we trade a rejection trade, what should we be looking for?
You saying which PAP?
Yes.
Oh, uh, Evening Star, Bearish engulfing.
Okay. What do we have
Um,
here on this 30-minute?
This kind of looks like an
Evening
evening
Star.
star.
Okay. So where would we enter this trade for this situation?
Right here,
Okay.
around there.
Measure your stop loss for that. I'm just curious to see myself what it is.
It looks like about 30,
36.
36, 37 pips.
Okay. So you went from a 37 pip stop loss down to a 22 pip stop loss by doing this technique. I just wanted you guys to see it with your own eyes. Now,
And
usually
when
it's
I
a lot
measured it
more.
earlier, it was 91 pip,
Hmm?
you know, reward. And I was saying when I measured it earlier, it was, I think it was like 90 something pips that you would have gotten. But with this, it's only like 50 something.
Right. So you better your reward, you lower your risk. Stop loss is pretty much the same in terms of where you're going to get out of the trades, not going higher, any number of pips higher than the actual stop loss of where it is, but the size of the risk is cut greatly by understanding this. Now that to me wasn't that great of a cut. I'd like to see it where it's 10 or less, to be honest with you. But sometimes it is what it is. In a minute chart, you're going to get that. Charts that are minute based, you're going to get that. But still, 37 versus 22, I'm sure you'd rather have 22 versus 37 as a stop loss.
Yeah.
All right. So just wanted you to see that with your own eyes in terms of how that works. Now, even if you said, okay, well, I just want to stick with the 30-minute entry off of a 4-hour key line with that price action pattern. Well, let's see what we got. Put your crosshair on the candle that you said was your entry candle. Your entry candle.
Oh, my bad. Here.
That's okay. What do you have there?
That is,
In the cycle.
oh, the cycler.
Yes.
Looks like we have a cycle high.
Okay. You do have a cycle high, but what else is going on with the 50? I'm showing you a
It's
couple
flat.
different. It's flat, right? What happens when the 50 goes flat?
You said we don't take trades when the
You should
50's
not
flat.
be taking a trade when the 50 is going flat. But now, if we just be patient enough, where does the 50 start to turn?
Here.
Okay, we've already had one interaction with the 4-hour key line. We're still expecting to go to the next 4-hour key line, am I right?
Correct.
Hadn't violated this trade, right?
Right.
So if we just be patient enough to wait on that 50 to give us some indication that it's about to turn, do we have a cycle high when it happens? Now let's just look at the cycler first.
Okay.
From this point, let me draw it. From here to here. What happens within the cycle? Let's look at cycle highs at that point. Every cycle high that happens in this area that it's happening in right here. Okay. So
Okay.
until we have, we still have a flat 50 in this area, even though it angled up some in this area. And we're looking for this, we're looking for only cycle highs because we know that this market has not rejected off of this 4-hour key line as of yet. So, and this does happen in markets where it just hangs around and then finally takes off. Okay. So in this case, and this is where I said, you may not necessarily be able to catch the first move of the trend. So right up in here to be able to catch this move, unless you were diligent enough to say, to guess, because you'd be guessing, to say, okay, well, you didn't take this cycle, or maybe you did take it and saw that it wasn't ready. Because if you did take it, you got stopped out.
Yeah.
And then you said, all right, when the next cycle high happens here, got a little closer to the key line. Now you would be safe here. So if you took this trade going down off this, when the K hooks down from 80, what candle is that? Put your crosshair on it. Go over one more. Look at what candle made the hook.
Oh, gotcha.
No, it's going to be to the right. You're in the right area. When the hook is made.
You're saying the cook on the black
on K,
line?
on K, that is your black line.
Oh, gotcha.
Doji.
Back up. No,
This
not
one?
too far. Next one. No, you were you're going all over it. After the doji.
Oh, here.
After the doji, the next doji. That candle.
Gotcha.
The hook is made, and you see this. This is your entry candle. That is a entry candle. Knowing that you are at a 4-hour key line, this is an entry. It's not a bad entry off 30 minutes. And you kind of do have somewhat of another pattern here. I wouldn't have a problem with taking that trade. And it actually works out because it did not come back to stop you out. It's one way that you can get in prior to this actually coming off of this 50. We know it's going to happen. But I'm giving you, right now, we're teaching you a more, not only higher probability, but a safer way of trading. So the market turns off of this, the 50, I'm sorry, SMA turns off of this 4-hour key line here, right?
Right.
So let's count our waves.
Okay.
Where's the count?
So beginning here.
We're looking for,
Looking for lows, right?
we're looking for a cycle low.
So that would be really all of this, right?
Yeah.
So that's gonna be 1.
Okay.
It's gonna be 2.
All right.
It's gonna be 3.
Not quite. K did, look at D. Did not get back above. So this is no count here.
Oh, you're correct. Okay.
Yeah.
So all of this would be, so
Right.
3.
It's your 3. Where's your, do we have
My
a
bad.
4?
Move the screen.
Yeah, no, it's gonna move. It's okay. Go ahead.
So then 4 would be here.
Okay. Let's stop there for now. So we got 4 there. I'm gonna have to, we'll just leave it where we are. So the 4 there, 3 here, 2 is up here,
And 1.
1 down here. Okay. We're looking to check our trades here and here. All right. Mainly that 2. But this is going to be your biggest trade. So we know we have a rejection off of 1. If you are in a situation where, okay, you weren't quick enough or you just weren't looking at the market, you didn't catch that move, but you know how to count waves. And so, all right, well, that was the beginning of a new trend, even though it came off of that 4-hour key line up top. Now what we have is, and I'm not sure if this was a true break or not after this. I was not seeing the time. I have to see this in the 4-hour happen. But in this case, came back below another 4-hour zone. It moved back to retest the area. In this case, this is your 15, right? 15 EMA.
Which one?
This
The
pink line.
Yeah, that's correct.
Okay. 15 EMA is holding it down from the 50. That is a trade opportunity. So what I'm going to show you here is an additional trade opportunity to what you already know. All right. You understand, everybody here should understand price action patterns off of key lines. What I'm going to show you here is, because we are counting waves and we're using these different indicators, it creates more opportunities between zones. May not be coming off the zone, but as long as it's going in the direction of the next zone of where we want it to go, we can still get in a trade, even if it didn't hit a zone. Okay, because it hit something else. It hit the indicator, the moving average. Okay, so the first retrace that you have in a trend, which is wave 2, when that comes back, you always look for wave 2 trades. Just look for them. Get in your head, look for that wave 2 trade. We're new into a trend. First retrace, look for that first retrace. It is going to be your biggest trade other than coming off of a rejection off of a zone.
We love the wave 2. The wave 2 is the money trade.
It is huge.
It's huge.
And it is the easiest one to catch.
You see, that's the money laugh right there.
I was
You
just
heard
about to
me?
say that's that money laugh.
That's the
Yes,
money
it is.
laugh. Yeah,
Right.
yeah, they're big.
Yes. Okay. But again, I'm using this in the context of our zones. I didn't catch the first trade up here with the off of the top 4 hour key line. Okay. But I saw the market come down, breaking this 4 hour because it didn't give a rejection off of it. I'm in the 30-minute time frame. So someone might have tried this and didn't let you in. But what should have stopped you from trying this trade to go back up is that this just angled down and it just started a new trend. The likelihood of this rejecting off this key line right here is very unlikely. This happens a lot. Okay, if you understand wave counts and you're approaching a key line, know what wave count you're in, because if it is early in a trend, be very careful about trying to take that trade against it. A brand new trend hitting a key line. So I believe this was a swap anyway. Okay, just be mindful of that. Don't trade against this. Okay, not that it won't do it, but the probability is that it won't go.
When you
against
say
it.
this, you're talking about this 50 EMA, right?
I'm talking, yes, the 50 EMA angling down.
Right.
Talking about this angling, just starting to angle from coming out of a flat area, and you're approaching a key line.
I got you. I got you.
That didn't make wave 1 yet.
Right. Got you. Okay.
I'd
I
be
got
very careful about trading against that. Some people I know would try to take that trade. Now, if they took it right, they would never got into that trade. But some folks like to be too quick, they would have got hit on that. All right. So just letting you know that understanding the wave counts not only helps you get into the right trade, it helps you stay out of the bad trade. Okay. So here we have first retrace in the trend that does not violate the 50 does not this violates the 50. 50 does not turn. So this is very apt to be a wave 2 trade, cycle high, entry at the cycle high there, whatever candle that created that hook, which is probably going to be this red candle. Your stop loss is here. And you either would get out at the next key line, which I'm not sure what that is, or the cycle low. It would either be here or here. Okay. Does everybody understand what we're looking at here? Kind of, sort of.
Yes, sir.
Yes,
Does it make sense to you?
Yeah.
yes.
Why we do what we do? Now, there's
And-
more to this. This is just timing. I'm showing you what we call it, not we call it, the way it was taught is these are the energies of the market. Okay. Your key lines are energies. That is the energy of support and resistance. which was in case either at supply or demand. That is an energy in the market. Your trend, do we have a trend, is another energy. You either do or you don't have a trend. There's no in between. You either do or you don't have a support or resistance, or a supply or demand. You do or you don't. You either do or you don't have timing to take the trade. And here was a good example of timing that was not good. Where do we have, if you put your cursor here, what kind of cycle do we have happening here?
This is a cycle low.
Okay. What kind of cycle should we be taking based off what the 50 is doing after a flat moving situation?
We're looking for cycle highs to take it down.
So should you be looking for a cycle low to take this back up at this point?
No.
Don't have timing. Here, you have a cycle high on the wave 2 that on a angling 50 that's going down. Do we have timing there?
Yes, yes, we do.
Timing, right? Yes, we do have timing. So we also have it coming off the 15 EMA, which is your resistance. So it handles that. That's one energy. It handles, it's got resistance to turn it around. We have the timing, which is your cycle indicator.
What are you looking at now?
I'm sorry, I'm
This pink
on the
line.
screen. All right, I'm on the wave 2. So we have the cycle high. Let me do this. Let me erase this stuff. Too much stuff. All right. We have, first off, we have a trend. That's 1. 2, we have the resistance of the 15 at a wave 2. Okay. So you have 1 is your trend, 2 resistance, support or resistance. You have resistance in this case. 3 is timing. The timing to take the trade is a cycle high where K hooks down from 80. Now this actually hooked down from here, then came back and did this. This is called a momentum shift pattern or a second chance pattern, meaning that it gave a opportunity up here and then gave a second opportunity here before it actually created the cycle. Or finish the cycle, I should say. Okay. It also did another thing, and that's called divergence, where you have a higher, I'm sorry, we're going down. So we have a lower high on the cycler and a higher high on price. It's called the divergence. And we don't think we've been talking about that at all in the cycler with the trend. It only matters when it goes with the trend. I don't care about divergences that go against the trend, just with the trend. If we get this divergence like this is an excellent opportunity to take a trade. So you've got 3
Oh, I see what you're saying.
different energies that you're being shown right now. There's more. There's actually a total of 5 energies. We're only showing you 3 right now. 1 is the trend, 2 is support resistance, 3 is timing. All those line up. This is a trade opportunity. With a very short stop loss and a very huge gain. Any questions?
So when we got into when you got into the trade in the 5-minute time frame initially, when we were at the higher key line,
Yes.
we saw the price action pattern in the 30-minute time frame.
Right.
But we did not.
I'm going to cut you off. You actually saw, if you had gone to the 5-minute, as soon as you saw it interacting with the 4-hour, you would have saw that candle creating itself before this price action pattern even started.
Right. So I guess I wanted to go back and look at what that was in the 5-minute.
Sure.
Because I recognize the PAPs, but in the 5 minute, I can't remember what. Did we look at the hook on the K?
Yeah, it was back. Go
Was
back.
that-
No, to the there. So it's here. This is the 5 minute. Yes,
Go back. Okay, yeah, it is.
you're right. Okay, yeah, here. So you're looking at this candle.
Mhm.
You have this hook on K.
Got you.
And Chris, could you define hook? So the hook would be when the K goes above my 80
Yes,
and
and
comes
hooks
back
back down.
down,
Yes, that's the
just
hook. I'm
below the
talking
80.
about.
Got you. Okay,
The
okay.
candle that creates the hook.
Got you. All right.
Yeah.
So that's a little different that when we drop down into the lowest or the lower time frame, we're not necessarily looking for a PAP.
Right.
We're looking for the.
I'm showing you a way to get inside of the PAP.
Gotcha. Okay.
PAP confirms it, but you're going to already be in the trade by the time it's confirmed.
By dropping
So
down to
so
the
you're
5
saying
minute.
this is gonna turn into a PAP in the 30-minute.
It did turn
eventually.
into a PAP.
Yeah.
Oh, you're right. Yeah, we
I
did
showed
look
you.
at that. You're right. You're right. You're right. My bad.
It turned
I forgot
into
that.
it.
Yeah. Yeah, you're right. Got you.
I think
Wow,
it didn't
okay.
finish till over here somewhere.
Right.
So when I said you can get multiple trades in lower time frames off of higher time frames, key lines, I know we're getting late, y'all, but please, we got to go. You go ahead. It's recorded, but I just want to go over these little points. When I said you get multiple trades, this is one trade here off of that candle. Came down, gave another one here. That's another trade right there. Go to the right. Let's see that one. Because we're still looking down. Cycle high. Here's another trade. Every time I see a cycle high, it's a trade. There. Until I get to that key line, every time I see a cycle high, it's a trade. There. Keep going. Here. Here.
So you can take these just all the way down.
You can just take them all the way down. Keep going. I'm not going to trade in here because we're flat. Kind of ugly.
That's kind of flat too.
I don't like this going back against me, but I'm starting to see here we're going back here. So if I didn't take this because it was still in a flat area, I would wait to the next cycle high, which is wait, hold up. Right here. He moved.
My bad.
It's okay. Here. If I missed that, I don't know if I like any of these. I don't really like any of that in there. I probably would not trade any of this. But all those that I chose were some pretty decent pips coming after it that didn't challenge it at all. No heat. Just give you examples of it. And we just keep doing this all the way down till we get to that next key line. You already know what you're looking for. The cycle high that gives you those energies that I just called out to you.
And would you have gotten out of the trade like
I
on
would
the
have,
cycle
yes.
lows on the way down? Like
I would have, yes. Because that's the way I trade. I like to take my anything double digits and above, I will take that money if I see it messing around with me. I'm not a rider. And I admit that. I have a problem with that. I am not going to ride a trade. I'm going to get my 10, 20, 30 points off a trade. And anything over 20 points for the day, I'm going to call it a day because I'm doing levels. But some people like to get 50, 70, 100 points. And it's your preference. I just like consistent growth.
got you.
Yeah. All right.
I saw that levels document in the group. I guess that's a conversation for another day.
That is a conversation for another day. That comes with discipline, and that is not the level sheet that we use. That was another trader and that trades with us, and that was something that he made up, but that's not the one that we use. So you could disregard that one.
Okay.
But that comes later down the line. Right now, we're sticking with our 2%.
Yeah. All right.
And this was good.
Keep practice counting your waves.
Yes.
Keep practicing, because the more you do it, the better you're gonna get.
Well, I had a question about that. I was trying to practice counting on a different pair,
Mhm.
but for some reason I cannot pull up the NAS on my market watch. Where is it? Because it's grayed out or something like that for me.
Hmm.
Yeah, it's this, but it's like a,
And
chart window, nothing.
I don't know what the deal is with that, my brother. What broker is this?
Quinix.
Oh, you should have. Well, I thought it was in NAS 100 on there.
It is NAS 100.
Yeah.
Oh, that's not the correct thing?
No.
Got you.
Adrian, this is Alana. I had the same problem. And if you want, I can, you can DM me and I can walk you through it in order to get
Okay,
it.
cool, thank you.
Great.
Appreciate that.
Good stuff. Good stuff. All right, folks.
Thank you, Chris.
Quite
Thank you,
welcome.
Jason.
All righty.